Ladies and gentlemen, may I have your attention? We're moving to the next session, where we'll be joined by BIS Innovation Hub with a presentation on Project Rio, a prototype of a central bank-specific real-time market monitoring platform. BIS is a forum for discussion on current economic and financial issues and other matters relevant to central banks and the financial sector at large. They'll be joining us online through a recorded session with Henry Holden, Salih Gulu, advisors of the BIS.
Hello and good afternoon. My name is Henry Holden.
My name is Salih Gulu.
And we both work at the BIS Innovation Hub Swiss Centre. And this afternoon, it's our great pleasure to talk to you at the IFSB about our Project Rio. So a little word of introduction on the BIS Innovation Hub. We're a fairly new part of the BIS. We're just over 2 years old. We have a threefold mandate, and that mandate is to sort of monitor critical trends in technology that matter to central banks and financial markets, to build things, which is fairly new for the BIS, to sort of develop public goods, and finally to serve as a focal point for central banks on innovation, and especially innovation that relates to central banking and financial markets. So we're in the Swiss Centre, but we have colleagues all around the world working in hosted organisations. So our host is the Swiss National Bank, but we have colleagues in Hong Kong and in Singapore, also in London at the Bank of England, and we have a Nordic centre based in Stockholm. We also have sort of launching very, very soon a centre in Frankfurt and Paris that serves the Euro system, and one in Toronto that's hosted by the Bank of Canada. And finally, we have a strategic partnership with our colleagues in the Federal Reserve Bank of New York. Although we work all around the world, we do have some sort of common strategic themes that sort of binds our work together. So we work on central bank digital currencies, we work on next generation FMIs, cyber resilience, SupTech and RegTech, open finance, and finally green finance. So Project Rio is built for central banks and by central banks too, as you'll hear, and Salih's going to introduce it.
Thank you, Henry. Technology is changing finance and especially FX markets for central banks to know what's happening in real time. In previous times, central banks will pick up the phone and call a dealer to know what's going on. But as machines trade with machines, who are you going to call? The BIS Markets Committee identified a need for new tools for central banks. So Rio has been developed by the BIS Innovation Hub Swiss Centre to meet this challenge. First, we had to build the platform. We deal with a great amount of very fast data with 100 milliseconds of message updates. We need less than 2 seconds to reconstruct the order book and make it ready for display. And while we are doing real-time monitoring, we needed to use a technology where we could process the data as it arrives. This is known as streaming technology. This is the foundational element behind many social media services and other commercial enterprises enabling analytics in real time. The whole platform runs on the Azure cloud. Our data sources are primary FX venues, EBS and Refinitiv. And from codes and trades, we derive the different measures, and for that we are using open source cloud agnostic technologies. The architecture is modular, so it's easily extendable and scalable. What we see here is the high overview of the platform, big and fast data. This is where machines trade with machines. But the goal of Rio is to bring a helpful tool for humans, for the central bank's analysts. And for them, we built the dashboard. To make it as useful as possible, we have done two things. We worked with a digital agency expert in user experience, and their motto is "We simplify." The principles behind the design is to help by giving visual guidance, make the data accessible in an intuitive and intelligible way. At the same time, we asked the central bank experts through a dashboard working group what's the information they are interested in, and together and iteratively, using their feedback, we came up with this design. So let's show you the dashboard, and for that, I will hand it over to Henry.
Thank you so much, Salih. So what you're seeing right now is the dashboard, the Rio dashboard. So what you can see here on the left-hand side are the different currency pairs. That's not all the currency pairs. That's some in the major markets basket. We've bucketed these currency pairs in different baskets, but it's pretty arbitrary. Actually, how we've designed this is so that any central bank can put any different currency pair in any different kind of basket. And the reason that that's useful, I'll come on to with these. So you can see here that there are three different gauges. And so right now we're looking at dollar yen. And for dollar yen, the little droplet here, that denotes where this currency pair is across these three different metrics. So liquidity is normal, trading activity is high, and volatility is high. But what does that actually mean, sort of low and high? Well, they're relative terms, and they're relative to the last 28 days. But importantly, they're relative to this time of day at the last 28 days. So we are looking at the 24th of February, about 9:30 a.m. in the European morning. Russia invaded Ukraine at this point in the morning. That's why this is lit up like a Christmas tree. That's why there's huge amounts of volatility. But nonetheless, you can sort of see there are differences across the different currency pairs as the markets have digested the news and the information. So what you can see here is liquidity is pretty normal for dollar yen, but across this basket of currency pairs, it's pretty low. And this is really important because what central banks told us is the first question they get asked is, where's my currency? What's happening in my currency? But the second question is, what's happening in the region? What's happening globally? Is this a local problem or is this something bigger? And Rio allows you to immediately see what's idiosyncratic and what isn't. So those are the three metrics. You can probably see the limit order book too. But before that, I'll just switch on to a different currency. So if I switch on to euro dollar, then you can see those metrics changing, and you can see the limit order book changing as well. Right now, what you're seeing is you're just seeing the mid price. You're seeing the mid price for the last 30 minutes. That can be changed too. You know, we can take a closer look and see what's happened by narrowing into the last 15 minutes, for example. And that will update the metrics and the limit order book too. But the real, well, one of the real innovations of Rio is being able to visualize the limit order book. So if I toggle this on, then what you can immediately see are the bids and the offers. And if I hover over those, you can see the volume of bids and offers, either side of the mid price. We take the 10 best of each. Now you can probably see some dark lines there. What that means is that there's more, in this case, more bids. So if I hover over there, you can see there the 11 and the 17. That's because there's more bids there. And that's really important for a central bank to know, because if a central bank's thinking of intervening, for example, then they can know where the market has sort of priced resistance in, and then they can avoid going above that. And also, if you want to know what's happened and why market has moved in such a way, you can turn on the trades as well. And you can see there those dots, those red and green dots. That's all the different trades. If I turn the limit order book off, then you can see them better. And you can see this is a very, very busy market, very large market, the euro dollar. So there's a lot of trading going on, especially this morning. As you can see, trading activity is very, very high. Another thing to look at is the sort of the evolution. So for example, if we were looking at the evolution of liquidity across the morning, sorry, if I just turned that off, then you can see, and say you wanted to take a longer time horizon, say for the last 3 hours, then you can see the liquidity across all these different currency pairs, and you could track them across the morning. You can see now the chart's updating itself. So obviously there's quite a few currency pairs there. If you just wanted to say take the Aussie dollar, then you could focus in on that one. And likewise, you can add other currencies too on top. The whole tool, as Salih explained, is designed to be flexible and designed to allow central banks to narrow in on the information that they need very quickly and very easily. There's also a detailed view that we're happy to go into. It shows broadly the same sort of information, but at a more granular level, and makes a sort of a more thorough analysis of any market event easier for central banks. The liquidity and trading activity chart is one that the central bank traders were very keen for us to include. It's not necessarily the most intuitive, but what you see here is you see the same liquidity and trading activity metrics, but laid over on a scatter chart. If we do the same thing as we did for the evolution chart, and we narrow in on Aussie dollar and euro franc, not necessarily the two most natural pairs, then you can see as the dots get lighter and darker, that denotes the sort of the movement of time. So if you have a dot here, a light dot, then you can see along this axis where there's the total trade count, it's moving to a higher trade count. So over the course of the last 3 hours, the euro franc, the trade count has gone up to be normal. And at the same time, the spread, so the liquidity is also normal. So the euro franc has gone from being fairly thinly traded and a slightly liquid to being absolutely normal. So it's sort of it's normal trading, and then we can have a look at that, and that's exactly what it's saying there. Volatility, of course, is not included in this one, and it is still a very volatile currency. So if we click into that, then you can see the same metrics updating themselves. And we can also click onto the, you can see there's been quite a lot of movement in the mid price, and volatility there is very high. So there's obviously quite a lot in the Rio tool, and then it's been designed that way. But I think the things to emphasize are this has been built by central banks for central banks. It's been built from the ground up. And there isn't a commercial provider that provides something like this. It's built completely around central bank requirements. And that's allowed us to learn a lot of technology lessons firsthand, which is part of our mandate at the BIS Innovation Hub. But it's also helped us develop this incredibly useful tool for central banks, and a tool that solves a real issue for central banks as well. And so if I sign off by saying, we're really sorry that we can't be there in person, not just so we couldn't enjoy the hospitality, but also so we couldn't answer questions and talk to you more. But nonetheless, the IFSB Secretariat has our details. So if you would like a demonstration for your markets team or for anybody who's interested, then we'd be more than happy to jump on a call. Or obviously, if you're ever in Basel or in Zurich, then do please let us know. But yes, we'd be very, very happy if you get in touch. So with that, we wish you the best for your event and hope to speak to you soon. Thank you very much.
Thank you. Goodbye.
Bye.
Thanks to BIS for joining us virtually. Moving on to our next session, which is our final panel, the Regulators session, the best one. We turn our attention to regulatory considerations in facilitating innovation to integrate climate financing, ESG, and sustainable development goals into the development of the IFSI. As the name suggests, we'll be covering a lot of ground, and it's my pleasure to have with me on stage Dr. Bello Lawal Dambata, Secretary General of the Islamic Financial Services Board, as our moderator. Our distinguished speakers in this panel are His Excellency Dr. Khalid Al-Bahar, Vice Governor of Supervision and Technology at Saudi Central Bank, His Excellency Suhaimi Ali, Assistant Governor of Bank Negara, Malaysia, Mr. Sahba Sobani, Director of UNDP, Mr. Peter Cassie, Consultant at IFSB, and Dr. Pranab Jyoti Barawa, the Global Green Growth Institute's Head of Mission in Qatar. Esteemed panelists, I give the floor to you.
Thank you very much, Jasser. Once again, good afternoon to all of you, and we would like to express our sincere appreciation to the esteemed panelists, Your Excellency. We thank you for being with us. Particularly, I will maybe perhaps, you have been introduced, but I will just maybe mention the name so that the audience will be able to identify who is who. So maybe perhaps I will start with His Excellency Dr. Khalid Al-Tahir. He is the Vice Governor of the Supervision and Technology in Saudi Central Bank. Thank you, Your Excellency, for being with us. And then we have His Excellency Suhaimi Ali, the Assistant Governor of Bank Negara, Malaysia. We thank you, Your Excellency, for being with us and for participating in our event. And then we have Mr. Sabah Sobani, the Director at UNDP. Thank you very much, Mr. Sabah. And then we have Mr. Peter Casey. Mr. Peter Casey is a consultant to the IFSB, and he is well known for many of you here. And then we also have Dr. Pranav, the GGGI Qatar. We thank you for being with us here today. Now, I don't intend to take much of our time, but I think the discussion from morning to now has been very, very interesting and exciting. This session is going to focus more on regulatory concerns or the regulators' considerations with regard to innovation, particularly related to facilitating innovation to integrate the climate change financing, the ESG and sustainable development goals into the development of the global Islamic financial services industry. We heard from the keynote addresses from the first session on Fintech and the second session on on ESG, there are quite a number of initiatives that is going on, and then there is a number of gaps as well that we have seen. We had the issue of challenges related to human talent, human resources. We had the issues related to the issue on brainwashing and actually greenwashing. I added the word brainwashing because the SMEs start with brainwashing and then they do the greenwashing. So you cannot separate the two. And we also have the issue of unclear defined taxonomy as a concern for the sustainability and the ESG and as well as SDGs, because the jurisdictions, the market differ from one jurisdiction to another, from one region to another. So we are privileged to have you as an esteemed speakers, and perhaps it is an opportunity that is long awaited by the audience to know what the regulators are actually doing. For this session, there are three questions. First question, I will start with you, Your Excellency. What are the ongoing initiatives currently being undertaken by particularly SAMA with regard to ensuring a very facilitative regulatory framework for innovation in sustainable finance in the Islamic financial services industry is in place? Perhaps I will go and along the entire panel and for you to share your own views with regard to this as per your respective institutions. Your Excellency.
Thank you so much. So first of all, Assalamu alaikum, everyone. It's really a pleasure to be here. Thank you for the IFSB and Qatar Central Bank and QFC for this opportunity to have this platform to share, needs, pains, experiences, and hopefully together make sure that we find the right way forward. It's a very important topic. From SAMA's perspective, the Saudi Central Bank's perspective, it's something that we take very seriously, and we look to collaborate with the different stakeholders, because we believe this is something that is definitely collective. We need all to identify, as you mentioned, the taxonomy. What are these issues that we really need to address, and how should we continue to address them in the right way? SAMA encourages innovation, so we have actually created and launched a sandbox for encouraging this type of innovation. We have launched that a couple of years ago. We've had more than 40 fintechs that went through, and we had different cohorts. And actually in September, early first week of September this year, we announced that it will be always on. So you are most welcome to come in and work with our teams, work with the different stakeholders in the market to bring in the real, the best for our markets and for the Islamic financing. SAMA is actually keen because Saudi Arabia is the world's largest Islamic finance market. I'm sure you're aware. I mean, more than $640 billion of Islamic assets. In Saudi Arabia, that's actually almost 80% of the overall asset base. So quite a large market. We even are the largest issuer of sovereign sukuks in 2021. Largest Islamic fintech market. In 21, we had a transaction volume of about $26 billion. So quite a large market. And what's important is for us to make sure that we encourage, enable the right focus and the right development. And there are several really good examples. So Saudi Electricity Company, for example, in 2021 issued green sukuks, 1.3 billion US dollars, right? And they were used for funding green, efficient smart meters. So we believe in very specific and very valuable impact-driving initiatives, and we believe that collectively can be taken together. There are also other examples. Riyadh Bank, for example, issued the world's first additional Tier 1 sustainability sukuk, about $750 million. So really a lot of movement, a lot of energy, and we look for further collaboration to address also the issues you mentioned around human capital, around sustainability, and so on. So, thank you.
Thank you, Excellency. Perhaps maybe Bank Negara Malaysia, maybe you can share your own perspective, please, Your Excellency Suhaimi.
Thank you. Thank you for having me here today, and Assalamualaikum to everyone. Let me start by sharing a bit of context with regard to Malaysia. Malaysia is one of the countries in Asia that is rich in tropical forest biodiversity. 55% of our land area is forested, which plays a crucial role in the national carbon balance. And while our contribution to the global CO2 emission stands currently at below 0.8%, being a small and open economy that basically exposes us to many externalities. And yet, as an emerging economy, our rights to development is important. And our transition to low carbon economy has to be done within an equitable and reasonable time frame in accordance with our national circumstances. The central bank journey with regard to dealing with climate change and ESG began with Islamic Finance Institution, in fact, in 2017 through the value-based intermediation framework. And 2 years later, we tried to basically mainstream this value-based intermediation and our effort to deal with climate change and ESG issues to the broader financial ecosystem. And this is mainly for one particular reason, is actually to continue to ensure that we can fulfill our mandate of financial stability and monetary stability. And being a bank-centric financial system, transmission of climate risk to the economy and the financial system can have a wide repercussion to these mandates if not managed well. So basically we are coming from the angle of the need to preserve the fulfillment of our mandate. So with this in mind, we started to position the financial system to facilitate an orderly and just transition to greener economy. And we do this in several ways. One is actually we have in place a regulator industry joint committee called Joint Committee of Climate Change, or JC3. So 1J and 3 Cs basically, to co-create a conducive sustainable finance ecosystem. I'll go into a bit more details in terms of what we do with JC3. And to promote transition finance, we also have dedicated funds, as well as we facilitate the issuance of green sukuk within our ecosystem to promote adoption of sustainable practices. And third, efforts to mainstream value-based intermediation continues. And this is very much to also achieve the goal of financial inclusion and ensuring finance for inclusion, finance for transformation, as well as finance for sustainability. And last but not least, if you read our latest financial sector blueprint that was recently launched this year, and this is for the period of 2021 to 2025, we have basically reoriented our regulatory posture to the one that basically trying to promote innovation and encourage greater market dynamism. In the past, initiatives tend to be very much central bank driven, and the industry basically just wait and see in terms of the guidance from the central bank. So what we want to do, given our experiences with the pandemic and the need for the industry to move quite fast and be agile in dealing with the kind of risks that we are seeing, we basically change our regulatory posture to be able to help the industry move faster and transition well to be more relevant going into the future. And few areas that we do, like the sandbox and fostering digitalization, has been in place for quite some time, since 2016. And what we also intend to do, or we have been doing, is actually to remove barriers to innovation and competition. And this is done through injection of new digital licenses in the banking sector as well as the insurance sector. If I may go just a bit deeper on JC3, this committee helps to ensure that the financial sector initiatives are aligned with the broader government policies and focuses on developing practical toolkits and ensuring consistent implementation of climate-related initiatives. There are 5 key focus areas, namely the risk management area, governance and disclosures, product and solutions, bridging data gaps, and capacity building. And there are various outcomes that we have seen, at least in the last few years. I will go into details in the second round.
Thank you, Excellency. I think one of the questions or one of the issues raised in the last previous 2 sessions was issue of the lack of proper guidance related to particularly disclosures and passporting. When you are, I mean, because this, if there will be risks that may be arising due to innovations, it will have a multiplier effect and it will have no boundary. So there is a need for regional collaborations and so on. Maybe perhaps in the next round, we'd like to know what the Saudi Central Bank is doing and the Bank Negara Malaysia is doing as a regulator to integrate these kind of collaborations into the frameworks that they are coming up. Now, Mr. Sahaba Sovani, you are representing the UNDP, and I believe you have been monitoring the developments and innovations, particularly on how to achieve the SDGs. Is there any recent initiatives or maybe collaborations between the UNDP and the regulatory authorities in ensuring that maybe this goal of the UNDP, particularly with regard to SDGs and Islamic finance, is being achieved based on your recent framework?
Absolutely. We are working closely with the G20 in the conventional side in terms of the Sustainable Finance Working Group framework. This has been co-chaired by China and the US, and Joting, that has been one venue. The other one has been with the OECD. Just to speak more specifically in terms of Islamic finance, we have a collaboration with the Islamic Development Bank. We've launched a global platform on impact investing and Islamic finance. In that context, we have a Green Sukuk initiative. We have worked on a Green Sukuk framework that was used in Indonesia in its first pioneering Green Sukuk bond in 2018 and has been used since then. We see three major types of activities that we support. One is, again, the framework, support for impact report. I think we need to see where the markets go. There was a speaker earlier talking about each jurisdiction needs to innovate, and build, but at some point, we need to bring it together. The second one, I think the pre-assessment and analysis is quite critical for the capital markets. We worked in Uzbekistan with ISDB and other. So ISDB is our American counterpart in this space, of course, working with you. And then I think the capacity development awareness is very critical. We just launched with IRTI from ISDB a massive open online course on Islamic finance for sustainable development with Durham University. And we welcome stakeholders from around the world and Qatar. I'm very pleased to be here with the Qatar Financial Centre. I think that capacity is also, to link it to the SDGs, is also missing, but we want to bring that. Thank you.
Thank you. Great to hear that. And I think the massive online, that is MOOCs, will go a long way in creating awareness and creating.
So we're going to have it blended. We're going to have the online. Also, we really welcome people from different areas. Your constituents need to work together to have in-country sort of training for key stakeholders. Thank you.
Okay, that's a great initiative. I mean, Mr. Peter, you work as a consultant. You have been a standard setting person for years, and I think you have now collaboration and consulting with not only the standard setting organizations, but as well the development banks. So what do you think is the initiative, the most important initiatives or the recent initiatives, including the project that you are handling for the IFSB with regard to regulation on innovations, particularly on these three areas?
Yeah. Okay. As a regulator, I tend to be looking to international standards, particularly for the financial sector. And we've been through a period where there were a whole array of standards initiatives, sometimes private sector, sometimes public, sometimes a mixture of both. And the whole environment was very confused. What we've seen recently, clearly with a great deal of G20 impetus behind it, has been the creation of the International Sustainability Standards Board. And there's been enough backing for that from very influential bodies that I think we can see that as being probably the key standard setter, at least in the disclosure areas for sustainability. Huge amounts of work to do. But of course, because I work with the IFSB and because the IFSB tries to work only where there are some specific Islamic finance issues, one of the questions that I have asked myself is, what are the Islamic specificities here? Where is Islamic finance different from conventional? And I get three bits of an answer. One is, I think that Islamic finance, partly because of its principle basis, partly if you want to go into more detail on a detailed theological basis, has reasons to be concerned about the environment. And I have even seen pieces tracing a theology which would see the whole of creation as a stakeholder in a financial institution. Now, whether that is good or general Islamic theology, I can't say. But clearly there is an important impetus to the why we should be concerned. Exactly what our concerns are in terms of outputs, however, may not differ very much. Frankly, a kiloton of carbon dioxide released into the atmosphere has the same effect whether it was financed by an Islamic bank or a conventional one. River pollution that leads to the death of a species has the same effect and is as damaging from an Islamic, I suggest, as from at least a principled conventional point of view. So as to outputs, probably not very much difference. There is then the question of how we go about it, and there are a number of technical questions which need to be considered. For example, there's the integration between ESG governance and Sharia governance in an Islamic financial institution. There's how we look at the particular instruments we have in Islamic finance. For example, a sukuk may be based on one set of assets, but financing the creation of a different set. How do we evaluate that in considering how it meets sustainability criteria? And I'm partly engaged in the work that the IFSB is doing to look at some of this. It's at the moment preparing a guidance note on sustainability in Islamic capital markets, which I think is at the stage where the Sharia scholars are looking at a first draft. I know that there is work under discussion to do similar work in banking. Of course, whether that goes ahead will depend on what the members and what the decision-making bodies of the IFSB think. But that's the background against which I think we're thinking about standards in particular.
Thank you, Peter. I believe not only, on the side of the IFSB, I will add some number of initiatives. For example, we are coming up with a new digitalization platform, whereby we will have a portal that will have a detailed work on digital innovations and digital initiatives that will be accessed by all our members. And in addition to that, we will be, as you rightly mentioned, we'll be working on a standard for the banking sector. So that is specifically on sustainability. We believe it's quite challenging to have a one-size-fits-all taxonomy for the ESG and sustainability. That's why I think even the ISB recently issued standard. The exposure draft actually doesn't have a clear definition and a very specific taxonomy on what makes or what is a sustainability. So they couldn't have that, and we are part of that initiative, and we are currently working to collaborate with FSB, BCBS, ISCO, and all other international standard setting bodies to have a forum so that we will be able to support the industry by coming up with a clear guidance. So perhaps, I don't know, I will go to Dr. Pranav now to see what the Global Green Growth Institute actually looking at in terms of initiatives that will aid innovations and achievement of these desired goals when it comes to stability and resilience. And particularly if there is a gap that you see from the regulators, you have a chance to talk to the regulators now. Thank you.
Thank you, Dr. Bello, and it's really a pleasure to be actually with this distinguished fellow panelist, and also thank you to QFC and IFSB to actually invite us here. So just to give you a little bit of background about GGGI, if you haven't heard, we are actually a small, I'll say comparative to UNDP, intergovernmental organizations. So we have around 43 member countries now, and with offices in 37 countries, including in Africa, Latin America, and even Europe. Basically, our main mandate is to support the governments to, on green economy and climate change policy and planning. So that's why we get into this also, the agenda of sustainable finance. So our bread and butter until very recently has been to actually support governments around development of green economy strategies, or national determined contributions, implementation policies. But since the agenda has now moved very firmly to implementation since the last few years, so we are getting more and more involved into the sustainable finance area as well. To give you an kind of very brief overview, because the question has been around what kind of has been the initiatives. Yeah. So currently, I think when we see the ESG related, I'll say, regulations, we see actually 4 areas. One is, of course, the government policy and the regulations around, say, national targets or sectoral targets, including NDCs. Another is taxonomy. I think you have been talking about it. Third one is, of course, the disclosure when it comes to financial sector. And fourth one is also, we think, reporting standards, which are linked to taxonomies and disclosures as well. So in case of GGGI, we very much work with, of course, government policy and regulations. For example, here in Qatar, our office is new, just opened in January. So we are working with the Ministry of Environment, Climate Change, basically to develop suitable policies and implementation frameworks for the National Climate Change Action Plan and also for National Environment and Climate Change Strategy that I unveiled in 2021. So in terms of taxonomies, we have been supporting actually several countries right now. So I can give you a good example, which is Mexico. It has been going on almost for 1.5 years. Because as you know, it's not that easy to develop this kind of, framework. And especially given that the learnings are still not enough. I mean, you can get some learnings from the EU taxonomy, but it's not directly applicable to the national context, so it takes time. So I think one of the things that innovations, we believe that in this area, and I think all of the policy-related areas that's needed is that to bring in different stakeholders, the inter-agency coordination. I think that is very, very necessary. And that's where we are focusing a lot in our work. We try to bring together all the stakeholders when we develop these kind of frameworks. So for example, in Mexico taxonomy work, we have been supporting Ministry of Finance, but we also bringing together, of course, different stakeholders, the central banks, Ministry of Environment, because everyone's input is needed there. And I think taxonomy is one area I want to emphasize because this is something I think drive innovation because you have to I think, how can I say, bring out the leaders and the laggards. And for that, you need to have some system in place there that can help you actually identify who are the leaders and who are the laggards. Because from the leaders, you can get the learnings that you can actually, help support the laggards to bring them to the same level. So I think this is one area we see has high potential and should be emphasized. And of course, it has to be very, how can I say, region specific. I think I'll stop there and I'll cover the other aspects in the coming questions.
Thank you very much, Dr. Pranab. I think distinguished participants, for this session, we'll also have a poll. There are 3 questions in the poll. Maybe perhaps if you can, please let's have the poll on the screen so that you can scan the QR code on your tables so that you can participate in the poll and then we will see the results later. Your Excellency, let me come back to you. One of the things that is of concern, particularly, is how do we strike the balance between the need to ramp up investment to achieve net zero commitments and the risks of greenwashing? What are the challenges faced by the regulators to strike this particular balance? I think this is something that I believe is of great interest, particularly to the industry.
I think the short answer is with a lot of care. That's how we should do it. We should make sure that that we understand the different activities that need to be done for real, impact, right? And we need to make sure that financial stability is also maintained as we do that. We do not want to rush and create risks. Right? And as a result, we, again, going back to understanding the taxonomy, understanding what it really means, so that then we look at the impact. At the end of the day, what matters is the impact and not the activities. So if people say we are doing 1, 2, 3, and they're trying to cover it up, right? But the impact is not there, then that's really what we need to care about. So if we look at the end and we keep the end in mind, we will balance that. One of the previous panelists said there will be greenwashing, so don't try to resist it. It will happen. And I think there is definitely truth into that. So I think instead of trying to say, how can we not have it, maybe we need to really say, let's focus on the outcome. Let's make sure that the outcome is what matters rather than the actions that are being declared, right? So I think that is one. The other is having good governance, right? And again, the role of central banks is to make sure that there is the right governance and that there is proper execution according to that governance. So proper supervision, making sure that the different stakeholders and entities are actually following through to the commitments that they are making. So I think that's a very important element. And we've seen a lot of examples in Saudi Arabia, for example, with Sharia compliance and so on. So we can use experience in defining what we expect, and then making sure that we have the right type of programs with the right outcome.
Thank you, Excellency. I can see, even from the poll, actually, the answer is yes or no for the first question, and majority believe that regulatory framework is really, really essential as one of the key important components in ensuring the success, particularly for the balancing act as well. Now, the point that you mentioned, I believe, is very, very essential, the fact that what's the end, what's the desired impact? So we work towards that in order to strike the balance. And at the same time as well, a clear taxonomy is quite essential. But I don't know, maybe from Bank Negara perspective, they may have some additional or a different view with regard to how you strike this balance.
Yeah. So thank you. First of all, let me mention that, most of our initiatives when it comes to climate-related issues and ESGs are done in collaboration and in consultation with the stakeholders. So it is not something that just, came out from the central bank or from the Securities Commission. And I think it is important to note that emerging economies like Malaysia, now we have two main challenges. One is actually to recover from the pandemic. At the same time, we need to avoid the pitfall of high carbon choices, which is no longer an option for us, which was implemented by the advanced economies in the past. So there are two main challenges confronting us. And to move in this space, then we have to basically carefully consider the balance between transitioning to green economy, but the impact of doing it hastily that may have repercussions to the financial inclusion agenda as well as social fallouts if not managed carefully. And another dimension to the issue that we have within the emerging economies ecosystem is actually the spillover impact of the actions by the advanced economies. And one example is actually the carbon border adjustment mechanism by the EU, which would definitely make exports from the emerging economies that are not in compliance with the standards drawn by EU to be more expensive and pricey. So in Malaysia, we have actually developed what we call the climate change and principle-based taxonomy. And this is actually led by the central bank and takes into account the state of our economy. And the aim is actually to ensure smooth transition and to avoid any outright exclusion of certain economic activities or vulnerable segment of the society that are currently not deemed to be green or sustainable. And this taxonomy is actually now being implemented. In addition to that, one major consideration is actually the need for capacity building to educate and empower businesses and even financial institutions to be able to implement this effectively. I think if I may address the issue of greenwashing, because there are criticism with regard to principle-based taxonomy, So there are several mitigation actions that we have done. One is actually to basically develop use cases to provide as guide for actors to operationalize the taxonomy. We also have a platform where industry players share knowledge, experience, and progress in the implementation of the taxonomy. We also issue several sectoral guides to guide the implementation of the taxonomy with metrics that are relevant to the specific sectors. And where applicable, we also leverage on relevant and recognized certifications as well as third-party assurances to ensure that clients or businesses comply with the relevant standards. So these are some of the things that we do in terms of ensuring that the greenwashing risk is actually managed quite properly.
Thank you. I think, Mr. Sahabat, the UNDP actually, you deal with all the stakeholders, the governments, the regulators, the marketplace, the SME, and the citizens in ensuring that the sustainable development goals are achieved, in which sustainability and ESG components are critical to the achievement of these sustainable development goals. Where do you think the balancing act will be more useful? I mean, we heard from the regulators, the two central banks give their own views and the initiative that they have taken. You, as someone that is inclusive in terms of all strategies to ensure success, and of course, any form of greenwashing will affect the quality of the goals, the achievement of the goals. So how do we balance the act, actually?
Absolutely. I mean, we've seen this in our deliberate, Your Excellencies, both Dr. Khalid and Mr. Suhami was referring to, be deliberate and cautious. For example, we had a product-centric approach in terms of standards. So we started with bonds, and the stakeholder consultation really went well. I mean, there's a track record. What is it? Green bond and how Sukuk green bond and how to go to SDG. But standards for private equity, for example, we still haven't come to a consensus among all these various stakeholders because, you know, there's a deeper question about how private equity operates and what it means. So I think that in order to balance this, we have to look at, you know, sort of the macro policy dimensions. We have to look at sort of the product approach, allow sandboxes for innovation, but at the same time, be cognizant that the risks that were referred to and also the nature of the stakeholders makes a difference. I mean, somebody said something to the effect that early on, oh, some people have all the technology to monitor carbon emissions. I've had people who go, as someone who works with communities, they go around and just walk around the same place where things are sent to London or wherever else, and you could see 10 different other set of environmental impacts. So you don't need the greatest technology, you just need the right set of actors to come together. I think the other thing is also investor protection issues around greenwashing is quite important. So that is something that needs to be addressed as we look at things, and every jurisdiction has to take into account. Specifically for me, when we're looking at Islamic finance, looking at more of these retail products, looking at different things that people are looking at. Thank you.
Yeah, thank you. Picking from the last point, investor protection is a very essential one and very important one. And this can be achieved in many ways by the regulators as well as by the marketplace. But to the marketplace, sometimes when the regulators are taking the issue on investor protection, they see some component of overregulation. Perhaps, maybe, Mr. Peter, what's your opinion in terms of the balancing act? How do we achieve the desired impact?
First of all, I know for sure that greenwashing is a public issue. The reason I know it for sure is that it has featured in all three of the Dilbert cartoons so far this week. In this context, in the ESG sphere. So clearly, it's something to which people are sensitized. It's encouraging that they are. There is a risk that greenwashing makes everybody cynical about the entire sustainability field, and that would be bad for us all and bad for the world. Regulators are generally pretty good at cracking down on outright lies about investment products. But choice of terms, choice of what you follow is a lot harder. The huge number of different standards that we had around has not helped in the past. It's fairly easy to pick one with which your product complies, or to pick a vague term. As an investor, however, I want to know that if somebody says to me, this is a sustainability fund, that there is some reasonable basis on which that claim is being made. So I think there are two channels of attack on this. The first is that regulators, and again, particularly where they're dealing with products for retail investors, are a little bit tighter on claims not being misleading. Outright lies, easily dealt with, but look, there are general concepts of true, fair, and not misleading, which capital markets regulators at least are fairly good at enforcing. They may need to do more. The other is that we move gradually into the development of more precise standards against which claims can be judged. However, I do take the point that we must not let the best be the enemy of the good. We must not wait until we've all got this nailed down before we can, as our first speaker said, actually get on with producing better outcomes.
Maybe perhaps the Global Green Growth Institute, you must have done maybe some research, or you have some support that you can provide to the industry with regard to what is the magnitude of this greenwashing potentially, and how it will affect investment in this area. Because I believe this is one of the mandate of the Global Green Growth Institute as well, to look at some of these potential areas of ethical consideration. So is there any research or some work that you think that will be of great use to the regulators and the marketplace in addressing this issue?
Well, we are not doing that kind of research, to be frank, greenwashing, but definitely I think what we are trying to do at the national scale, of course, to the policymakers, is that actually emphasize the fact what His Excellency has indicated in his intervention, is focusing on the impact. Because I think many times we are talking about, okay, this is the policies in place, these are the initiatives in place, but what is the real impact in terms of GHG emissions, in terms of, for example, jobs created, or in terms of access to energy or access to waste management, whatever it is at the national scale. But it could be different at the entity scale. I think that is the area that we are really focusing on. We have also started putting in place and implemented one system ourselves within the organization, and the 37 countries that we operate, is that really focusing whatever we are doing, what is the impact in the real number values, and how can you make sure that it is credible. So I think this is like, data is one of the key, impediment, as you know. It's not only at the entity level, but at the country level also. I think that is another area we are trying to support. Trying to actually develop and support development of what we call the measurement, reporting, and verification systems for the countries to report their emissions, not only emissions, but climate actions to the UNFCCC. But these could be also the basis and can be linked to the, entity level initiatives that, regulators or companies are developing. I think these are the two areas we are really working on. I think in terms of challenges, I think you have very nicely outlined that there are a lot of standards out there. It is not helping, but I would say that these kind of things happen when you have a new movement coming, because only in the last 2 or 3 years we are seeing the surge in ESG related, reporting or initiatives. So I think it's natural that this will happen in the beginning, but you can see there is a lot of good developments. Now IFRS is coming up with a more, hopefully, robust standard that can be adopted by the industry. And also I think there are a lot of initiatives at the leading country level also. EU will be, I think, publishing this ESRS new standards by working with GRI, which has been actually adopted by companies quite widely. So I think in the next 2 years, I feel we'll see the consolidation of these standards and also kind of the learnings that will be incorporated that in the new standards that will be coming into being. So, but one of the things that I wanted to highlight is that, especially the countries that we work in, that we are seeing, is that sometimes you have all the frameworks in place, but you have not enough good projects that you can invest in. So I think we have to also focus on how to make sure how actually you can have bankable projects, bankable projects, and how to also develop the capacity in terms of sustainable professionals. Because I think this has to go hand in hand. You can have nice policies, frameworks in place, but if you do not have enough trained people who can implement that, and if you do not have enough projects where you can actually, apply these standards, I think it will not work. So I think both sides you have to balance. And that's why I want to come back to the first point, that all stakeholders have to work together. I think the central banks have to work with the ministries. The ministries have to work with central banks when they develop the, national policies. Then only you can see how this could be synchronized and actually move forward together. I think I will stop there.
Yeah. Thank you, Doctor. I mean, you have actually took us to the last and final question, basically, on what's the way forward. Your Excellencies and distinguished speakers, we had since morning, talent is an issue. Data is an issue, particularly with regard to the Fintech. A clear, defined, and effective taxonomy is an issue. Another important consideration is this brainwashing. Your Excellency, you said it's inevitable. We cannot stop it, but we focus more on the desired impact. So, and then another important thing is legal and regulatory framework has been given a significant consideration, but even though an enabling environment, consumer protection, or investor protections are all essential components. Now, I believe the market players here with us, and these institutions that are coming up with these initiatives, would like to hear from you, what's the way forward? Because regional collaboration, or we don't need to reinvent the wheel in certain fronts, but I mean there are some need for greater coordination and collaboration between the regulators, the industry, and particularly, in the industry, the market players, those that are initiating this. So what's the way forward that will ensure resilience and stability of the Islamic financial service industry? I believe Sharia compliance is one of those things that will be taken care of by the regulatory frameworks. But what's the way forward? And then what do you want to, how you think the regulators will address the concern that is being raised today by the market players? Perhaps your individual perspective will be very appreciated.
So it's a very important point, and what is really clear is the need for collaboration, as you mentioned. And for collaboration to happen in the right way, we need to understand what is the end outcome that is expected, right? It's also important to understand the current state. So visibility on where we are now, what is it that we are trying to achieve, right? I think is critical. And then we need to make sure that we have visibility on progress. So once we define what needs to be done, there has to be that governance that we talked about to make sure that we're doing the right things to achieve that objective, right? There has to be the use of the right technologies, right? To make sure that they enable us to see that we are actually executing on what is being done, collection of data, providing the insights. There could be entities that genuinely want to drive impact, but then are not seeing that what they're doing is not really driving the outcome that they are looking for. So providing that insight and that feedback is critical. And then the last element that was mentioned just now and by yourself about people is very important. So what are the skill sets that are needed? So do we know today what these skill sets are? Do we know how to build that human capital that actually can guide? Because again, there could be genuine interest and genuine intent, right? But not necessarily clarity on how to achieve that, right? Technology by itself, will not achieve that, right? So we need to really have that combination and the right intent And I can say that, central banks and particularly Saudi Central Bank is keen to have the platform to collaborate, to create that clarity and that visibility on the plan, and then visibility on execution and the outcome.
Your Excellency, I mean, before I go to Your Excellency Suhaimi, I think there was an issue raised on passporting.
Yeah.
So you have some views on how the policymakers should address this?
Well, I mean, I think it's aligned with what we just mentioned, that it's important to have a common platform with the common language of what it means to achieve the outcome that we are looking for, right? So that also there aren't, diluted efforts. Because if there is intent, genuine, we need to put in the tools in the hands of the decision makers to be able to achieve these outcomes, right? Yep. So I think that's really what the first step that needs to be done, right? How do we achieve the outcome we are looking for? What is the governance to achieve that? And making sure that there is human capital that helps in that execution. I think once we have that combination, then we will be able to achieve that objective.
Excellent. Thank you, Your Excellency. Perhaps, Your Excellency Suhaimi, what's your views on
Thank you.
The way forward?
Thank you. So, resilient and progressive financial sector remains an important pursuit for the economic well-being of the people. And when we first started on this journey a few years back, there were uneven level of awareness, understanding, and maturity of climate risk management within the industry, and even within the central bank. None of us were familiar with climate risk management. And recognizing that, the understanding is very low at that point in time, the central bank decided to basically espouse the call for climate action by the financial sector. And given that the practices and the understanding is still evolving, we decided to step back from issuing any hard-coded regulation and allow the discussion to take place, allow the convergence of views and ideas so that whatever that we decide to move forward on would be something that is actually comfortable and practicable to be implemented by the industry. Now, as we develop greater understanding of the issues surrounding climate risk management, there are a few things that we are doing. One is actually setting regulatory expectations. And we recently issued exposure draft on climate risk management and scenario analysis. There's also a plan for mandatory adoption of the disclosure requirements, and also for us to be able to do industry-wide stress testing in 2024. At the same time, as financial institutions start to have their internal targets, our own internal capability within the central bank in terms of how do we supervise and understand how such target that the industry set for themselves would have implications on the safety and soundness is also important for us to have that kind of understanding and capability. Another point that we are looking quite closely is actually in terms of ensuring coherence in the regulatory framework that we have. For example, we continue to bring together the kind of work that we do on value-based intermediation to be in sync with the work on climate change to ensure coherence in the framework for sustainable finance. Of course, as mentioned by our speaker, the need to have coordinated efforts with the government is key. And, in playing our role as advisor to the government, we continue to have that engagement. And two more short points. One, which I differ from the earlier session in terms of opinion, and to us, we expect the climate risk to be managed in an integrated manner with other financial risks. So we do not see the need for, let's say, specialized institutions, because we think that each institution would need to embed within their financial risk management. And the Central Bank of Malaysia adopts what we call a risk-focused approach to then develop the necessary building blocks. Within the ASEAN ecosystem, we have ASEAN Taxonomy Board that basically work on harmonizing the taxonomy classification. Malaysia leads the foundation framework, which is applicable to all ASEAN members, whereby Singapore leads the Standard Plus or Plus Standard, which is applicable to countries that are more advanced in their climate risk management. Thank you.
Thank you very much. Perhaps, Mr. Sahaba, I mean, as an independent stakeholder, I mean, what do you think the policymakers should focus in ensuring the stability and resilience of the Islamic financial service industry? You have now engaged with the ISDB, and you have issued quite a number of sukuk, and then you have shared your strategic framework over the coming years. I'm sure you are very much interested on how the policymakers will be able to address some of these concerns from the market players, particularly.
We have right now in Pakistan one of the biggest catastrophe with climate change. You have a power plant sitting there which might get flooded soon, where 6 provinces might go underwater. So the question of resilient infrastructure is very critical right now. I talked about in the bond, one of the issues we face, for example, right now we're trying to structure with Kanyon municipality, which is a municipality in Turkey, the first municipal green bond, sukuk bond. And one of the issues was a standardized sort of Sharia compliant project financing template, which can be used. We're having things being done in every transaction on some of these things, looking at the green and sort of the Islamic finance sort of elements of it. So there are very specific things that we can do right now, especially on infrastructure financing, that I think is critical, because resilient infrastructure financing in this part of the world that'll be affected. The other, of course, is the tax considerations, versus conventional. So I asked IFSB and stakeholders to really look at this issue of standardization of some of these templates, and how can we enable different actors to use that. Thank you very much.
Yeah, thank you very much. We will definitely be looking into that, and we are, as I mentioned, we are currently working with other international standard setting bodies like the FSB and BCBS and so on, and ISB as well, to come up with maybe a unified kind of guidance, because we don't want to be replicating work of others, and then we want to ensure that there is a global best practice document that is out there that can be served as a reference toolkit for both the regulators and any stakeholder that want to look at that. So definitely we appreciate that and we'll be working on that. Now, coming to you, Peter, you have been working with the regulators. You are a regulator. You have been setting standards, and you had the views of His Excellency, the Vice Governor of Saudi Central Bank, and His Excellency, the Assistant Governor from Bank Negara, on the initiatives on the ways to address some of these issues that may potentially affect the resilience and stability of the Islamic financial service industry in terms of policy as a way forward. Do you think there is still a gap from the point that they have shared? I mean, you have the opportunity to say it to them here, rather than you say it through the IFSB documents, so that you prepare their mind.
I think that there is a gap, and it's a gap that has actually been very visible in some of the international standard setters, like the Basel Committee. What they have started by addressing, and I understand the reasons, which are partly political, has been concerned first dominantly with climate. That's partly because climate is the relatively easy thing to address. We can eventually think in terms of tons of CO2. We can eventually think with good scientific models, if temperatures rise so and so, then this will be the effect. But the other thing is that they have looked too exclusively at financial stability. What they have actually looked at is what is the effect of climate change on our banks. So physical impacts, are the headquarters going to be underwater? Financial impacts, are their financings or their investments going to lose value? But it's fundamentally, what does climate change do to the banks? The significant question is first the other way. What do the banks do to climate change? And of course, we've had a lot of discussion about that. What is the impact of their financings? I think technically we're talking about the so-called Scope 3 impact, which is pretty much everything up and down the value chain. That is a lot more difficult. And that is where we are beginning to make some progress, particularly through the ISSB. But it's relatively slow work. Even slower work is trying to get the impacts of the banks, the capital markets, the insurers on the wider aspects of sustainability. And if I look at the UN Sustainable Development Goals, I'm seeing important things like human health and education and biodiversity appearing in those goals. We have a real problem there. We don't have a consistent way of measuring them, and perhaps we never will. Perhaps, if I have a passion for education and you have a passion for health, we will always find ourselves speaking slightly different language. But what we are not really evaluating to anything like the same extent is the impact of the financial system on sustainability more widely. That is the difficult problem. That is where I would like to see more progress made. But it is difficult, it's small steps. We should never be deterred from doing what we can now because we can't do everything.
Thank you, Peter. Dr. Pranab, the Triple GI, actually, you just mentioned that you have presence in about 48 or 47 countries?
37 countries.
Yeah, so I mean, what do you think should be the focus? And I don't know how much of Islamic finance you wanted to utilize in achieving your mandate, but I mean, what should be the focus or the way forward for the policy makers, particularly in ensuring the stability and the resilience of the financial system due to innovations as well as initiatives related to sustainability, ESG, and the SDG goals, actually?
Yeah, thank you. I think we do not have a right now mandate how much of the Islamic finance or the finance mobilization should be from the Islamic finance side, but we are working closely with, for example, Islamic development banks and likes to make that happen. But in the years ahead, probably we will have. I think in terms of stability, I would say from more national context, because things are not like, separate. Always things are linked. What happens at the national level policymaking context also, impacts or linked to the financial sector as well. So one of the things I already mentioned, I think there should be more coordination, interagency coordination, because that will lead to the policy coherency. Because I think that is what you see most of the time, the big impediments in terms of that leads to the instability. But another area I would like to emphasize is the focus on the scenarios, because climate change is a kind of issue that you cannot predict everything. So I think focus on the scenarios in terms of the risks that the banks or the entities face should be the emphasis, and also scenarios in terms of how your activities could also impact the achievement of the goals. I think this Network for Greening Financial System has already some guidelines around scenarios. I think those should be, I'll say, should followed more closely and should be pursued. Because I think from our perspective also what we do scenario analysis to develop the green economy pathways for countries. And you'll say there is different ways of achieving things and different ways things like climate change can impact an entity. So I think once you have the scenarios, then you can actually envision what are the things you can put in place. So another area, of course, is the transparency, the disclosure side. I think that will reduce, focusing on the transparency side will reduce, I think, I'll say, the risk and the instability that we are talking about. Because with more transparency, there'll be more innovation and more things in place that could, minimize this instability. I think I will stop there.
All
these
right.
3 points.
Thank you very much. Ladies and gentlemen, this session, or the objective of this forum, is actually to allow some dialogue. I believe there has been 3 sessions now, and then we as the organizers, IFSB, QFC, and Qatar Central Bank, will definitely feel guilty if we do not give the opportunity for those audience that came from far to have a chance to say a few words in terms of question. If they have a question, we have the regulators, we have the stakeholders here. If you have questions, we can just take. I know we are standing between you and the lunch. I think I can see the faces, but it's something that we can, inshallah, try to deliver. That's why I try as much as I can. As per the program, we're supposed to end at 2:30. So I think I need to make this disclaimer, even though I saw Nadine looking at me and waving hands. So the program that I have is 2:30. So we will be able to, inshallah, take some few questions. If there is any, maybe 2 or 3 questions from the audience. Yes, we have one. Can we have a mic? Otherwise, I will feel guilty. We invited you. We did not give you a chance to express yourself and ask questions to the audience. So we have one here. Any other one? All right, so we have 2. Dr. Dalali, you want to? All right. Any other person? So we have 2 questions. Please, the gentleman there.
I am Dr. Abdul Samad Al-Azzani from Qatar University. I think the most player who can enforce to, let's say, guide and improve the innovation about sustainable and ESG is the security commissions, which we didn't see them, because they can, let's say, issue some requirements, and some of the countries they did, like Malaysia, they did, the listed companies that they should to disclose, at least at the beginning, then later they can show the real action towards the ESG. So I think the Security Commission is the main player to enforce some regulations for the listed companies to start the journey. Thank you.
All right, thank you. We take that as a comment, and we'll pass it to the Securities Commission, inshallah. Yes? Please introduce yourself as well.
Okay, Assalamu alaikum. My name is Isayao from the Central Bank of Nigeria. I want to congratulate the IFSB for this very incisive discussion. From the morning we've been learning, and this particular session this afternoon is most interesting to me, especially because it's coming from the regulator's perspective. Mine is a question and a comment per se. It's easier for a developed economy to say they want to draw a line and develop guidelines and processes for sustainability because they're out there. For a developing economy, how do you draw the line? And how do you, yes, draw the line and marry and sync the two between trying to develop your economy and ensuring sustainability? Because one, perhaps I have a lot of unemployment, I want to be productive, I want to manufacture as much as possible. At the same time, I do not want to harm the economy. So it's a chicken and an egg thing. How do we draw the line and how do we ensure that we're able to achieve the two? I think this is an important discussion that we need to discuss and try to see how we can draw the line between the two. Once again, congratulations to IFSB, the Qatar Financial Corporation, as well as the Central Bank of Qatar. Thank you.
Thank you. Thank you. Perhaps maybe Your Excellency, okay. You want to start, Mr. Saba?
Yeah,
all right.
I think this is an important point also in terms of what is the business case for these kinds of business model that are sustainable. We have to look at what's behind them. There's a report that was issued, and there was a lady from Nigeria also who runs a port, so a traditional oil and gas sort of outfit that was issued by the Secretary General that highlights 63 business models that were going to be profitable in the future, very specific business models. You know, when you're looking at, for example, agriculture, you have to adapt with climate change. So these are things that, for people, you know, the business case for employment for other things are more clear. But you're right, there are more, some of them where there's trade-off. I mean, Nigeria, as we know, is a oil and gas producer. Now in the West, we see people are using gas, you know, in terms of. So I think the business, looking at the business model, also the time horizon. What does it take to transition? But the reality is the world will change in the next 10, 15 years, and people are investing. I'll give you one example. There are hedge fund managers right now who've told me, identify 20 similar sort of projects, infrastructure projects, like the California gas and utilities that went bankrupt because of wildfire. They made a lot of money because they bet against that California. So people are unaware of all the climate risks that's affecting their existing infrastructure. And there are hedge fund managers and others that are using short-term climate analytics to try to make things. So it is also being aware of what is happening in the world.
Yeah, all right, okay. You want to share, I mean, how the emerging economics differ in terms of the approach, yes?
I think I had to, because most of our work in the developing and emerging economies, and I think what we do is first, of course, help identify the governments, those opportunities for greening. And when you talk about greening, it's not like you have to not talk about growth, because for emerging and developing economies, of course, you have to grow to reduce poverty, to create jobs. So actually find those opportunities where you can create the most jobs. And there are a lot of opportunities. And I think our speaker talked about agriculture. For example, climate smart agriculture is one of the areas where you can make the agricultural sector more resilient and increase productivity, but at the same time, you can actually contribute to the climate mitigation and adaptation as well. And same for example, transportation. You don't have to use the same model of transportation that the developed countries have followed so far. You can focus on public transportation, where I think more poorer section of the society have the mobility, and that means also social mobility as well. So there are a lot of, I think, areas that you can look at and actually look at the pathways, how the country can develop while in a greening and adapting themselves. So I think I'll be happy to talk to you on this, and if you're interested, because that's what exactly we do. And I think for countries who are in oil and gas sector, of course, going forward, I think they have to think about how to transition. I think in next 50, 60, 100 years, whatever it is. And then how you can actually use the current resources to do the diversification. I think Qatar is already looking at those areas, and that's why we are here to see or help them identify those opportunities for diversification. And I think there is not a straight single answer and no silver bullet, but there are a lot of options out there. And that's why I emphasize on the scenario analysis. Yeah. We have to look at the scenarios, and we have to look at different pathways to see how certain pathways can be most beneficial to the country and create the maximum benefits.
Thank you, Dr. Pranab. Yeah, okay.
Maybe just a couple of comments. It's an excellent question. I think it's important to understand when we talk about these types of programs, there is an implied assumption or that they are not commercially viable, right? When we say, in developing countries, we have specific needs and we need to make sure that we meet them before we actually introduce this type of, sustainability, ESG, environmental, right? So there is really an inherent assumption that if you have that type of program, then it is not competitive or it is not, commercially viable. And I think there is an opportunity to say, how can we, either through innovation, through platforms where we actually can address that problem and say, how can we have, environment, ESG compliant, environmentally, friendly programs that will also be, profitable and successful, right? So I think that's the first point. The second is around the need. So if we look at developing markets, the need to have these types of programs is even more than developed markets, right? So I think it really is on both sides. We need to really look at this very carefully and say, we really need this. And we want to make it happen here. And we really want to find innovative ways to encourage that type of solution finding, right? And then, whether engage the regulator, other stakeholders, for sure, because it's not only the regulators, it's also, you need to execute on this, right? So we need to facilitate, getting this done and not make it difficult for organizations to make this a success.
Thank you, Excellency. And I think in addition to that, I think that's why the issue of a clear taxonomy is very essential for most countries, because the taxonomy that is applicable for an undeveloped economy is totally different from that of a developing economy or an emerging economy. And also the regional locations, or the geographical locations and the geographic demographics actually matters a lot. So I think these are some of the ways that we can be perhaps, through these defined, clear taxonomies, we can be able to address some of this. We have opportunity for one last question. All right. Can you please give the mic to... All right, okay, please.
Hi, this is Aditya from QFC. My question to the panel is that while all the jurisdiction and the industry is developing their taxonomies, their regulations, where do you see the cross-industry and the cross-country, cross-regional collaboration and uniformity coming in the few days, months, or years?
Brilliant, excellent question.
Thank you.
Yeah, Excellency. Yeah, please.
Happy to start. I think no doubt that collaboration is always key for success, right? I mean, I don't know if there is really the right solution to solve it alone. I don't think neither entity or country would really be successful in addressing this alone. And the elements for successful collaboration, starts with clarity on what are we trying to achieve, right? On clarity on the roles of, because it could be different roles. Collaboration among countries doesn't mean that every country needs to do exactly the same thing, right? We just need to say, what do I need to address and what do you need to address, and then how can we together be able to achieve these overall objectives. And then there is, talent, as we mentioned earlier, clarity on who will be able to drive this agenda, right? Now, of course, governance and compliance to the governance is critical, because also you want to make it fair and you want to make sure that the outcome is properly measured, right? And it's not, as we were talking, just talk, right? Thank you.
Well, I mean, if you want to wait for everybody around the table to come together and move at the same pace, it's not going to happen. So someone with influence will need to kickstart and bring, the relevant parties together on the journey. And similarly, within the ASEAN ecosystem, generally, we have a framework that allows, whenever there are 2 or more members are willing to work on certain projects, you can go ahead and work on those projects. And then whenever other members are ready, then they can join the bandwagon. And that's how we get things moving in ASEAN. Otherwise, things will not move.
Okay. Perhaps, Peter, I mean, the question from the brother, a gentleman from the Hamad bin Khalifa University, is there anything different that the securities commissions should be looking at different from what you have shared as a capital market regulator? Maybe perhaps that will give some response on behalf of the capital market regulators, because Peter Casey worked as a regulator of capital market and worked with the Securities Commission. Is there anything different from what we have discussed on the stage?
Well, you may have noticed that some of what I said was from the point of view of securities regulation. And I was concerned about investor protection. I was concerned about disclosure in products that might be bought by retail investors, particularly, for example, collective investment funds, and to the extent that investors go into them directly in Sukuk. And of course, when we think about Islamic capital markets, we always think about Sharia-compliant securities. Yes, the disclosures for listed entities are very much the business of securities commissions. And it was indeed them that I had dominantly in mind when I said those are people who are, or should be, pretty experienced at looking for the downright lie, but perhaps need to do more when dealing with the slightly misplaced or misleading statements. Now, that said, if you say who ought to be around the table having these discussions, that depends a great deal on how the financial systems work in different countries. And I can go to one country and say the capital markets are the really, really important places, and there is big traffic in securities, big traffic in funds. That is the way that fundamentally that the savings of investors are mobilized for industry. That, therefore, is what you want to influence if you want to get investment into the right places. But I can go to another country and say, this country is dominated by the banking system. Where industry really gets its finance is from the banks, and the listings on its stock exchange may be quite thin. The people do not save through collective investment funds. They put it all in the bank or they put it all in their house. So I would not, without knowing it well, say to any particular country, your focus ought to be that end of regulation. But I do firmly believe that securities commissions all have a responsibility.
Thank you very much, Peter. Ladies and gentlemen, we'll come to the end of our session. Your Excellencies, distinguished speakers, we sincerely thank you for your time and for being with us. I would like to once again express our sincere appreciations to Qatar Financial Centre, led by my very, very good, very humble brother, Mr. Yusuf Al-Jaida. We thank you most sincerely. On behalf of the IFSB and all its members, I thank Mr. Hank, the team, Nadine, all from Ayman, from all QFC team. And I really want to also thank our colleagues from the Qatar Central Bank for your support and for being here with us. His Excellency Sheikh Bandar, we really appreciate his presence and for delivering the keynote. And then, of course, my friends from Hamad bin Khalifa University, who are our academic partners. And as I mentioned, we will be publishing the proceedings of this particular forum, inshallah, and then we'll make copy available on the IFSB website. And the IFSB standards that we're working on are still readily available. And Bi'iznillahi ta'ala will be celebrating our 20 years anniversary next year. And we really want to have your presence and your endorsement of our 20 years journey in all our activities that will be coming up. And I would like to use this opportunity to thank my colleagues from this IFSB Secretariat for working tirelessly together with the QFC in ensuring the success of the event. Thank you very much, Your Excellencies, and we really appreciated the engagement. If you have not taken part in the poll, please do so before the polls are closed, because we would like to have that statistics as part of our proceedings. So with that, I once again thank you, Mr. Yusuf Al-Jaida and your team. We really appreciated your presence. Your Excellencies, we really appreciated your presence in IFSB's 4th Innovation Forum. There will be a closing remarks. I don't intend to preempt what the closing remarks is going to be, and it will be done by Dr. Chechev. So I think we really thank you for your time and for bearing with us. Thank you very much. Wassalamu alaikum wa rahmatullah.
Maybe later we can have one. Thank you, Your Excellencies and gentlemen, for this insightful look at the opportunities and risk on our journey towards achieving development in the IFSI, especially when it comes to ESG and sustainability. This has been an impactful closing panel. And before we conclude the 4th IFSB Innovation Forum, I would like to invite Dr. Rajab Santurk, Dean of Faculty of Islamic Studies at Hamad bin Khalifa University, for the closing remarks.
Assalamu alaikum, everyone. أعوذ بالله من الشيطان الرجيم بسم الله الرحمن الرحيم Alhamdulillahi Rabbil Alameen, wa salatu wa salamu ala rasulina wa habibina Muhammadin wa ala alihi wa sahbihi ajma'in. Rabbana atina min ladunka rahmatan wa hi lana min amrina rashada. Respected attendees, excellencies, ladies and gentlemen, my warmest regards and greetings to you all. I'm not going to stand between you and your lunch for a long time because my teachers told me that إذا حضر الطعام بطل الكلام. So I'm not going to take much of your time. I arrived to Qatar less than a month ago, and I had a very warm welcome after I exited the airport. And this warm welcome still continues, but I'm no longer a guest in this country because Qataris told me that diyafa only for 3 days. After that, you become a local and member of the household. In my talk, I would like to draw your attention to the innovation in making the conceptual, theoretical, and philosophical foundations of SGD, ESG, and Islamic finance sustainable. Because there is a theoretical, philosophical foundation for everything we are discussing here. And I will emphasize epistemic and moral sustainability on which the issues we are discussing here are grounded. And when I say innovation, I don't mean the bid'ah, I mean tajdeed. And tajdeed is always rooted in our tradition, which is what I call rooted revival. Rooted revival, at-tajdeed al-mu'assal. Al-mu'assal means principled, methodological, not haphazard, without any guidelines. And this at-tajdeed al-mu'assal is needed for the resilience of our societies, for the stability and sustainability. The time demands more flexible curriculum for the colleges and universities. The terms of recruiting the teachers and professors shall be reviewed to help develop the synergies between the academics and field experts for offering a blended form of classroom teaching and real-world experience sharing. And this is what we are doing here. The synergies should enable the students to keep pace with the concurrent changes and trends in the world that the graduates shall face and shall be able to contribute it soon after they complete the phase of their formal education at the universities and schools. That's why I'm very proud to be here, as I see many CIS graduates here, and I greet all of them. I don't want to say raise your hands, because there are many of them. At the outset, on behalf of HBKU, CIS, and my faculty, I would like to extend profound thanks to Secretary General of IFSB, Dr. Bello Lawal Dambatta, for designating us as an academic partner for this prestigious event, and we hope to retain this relationship for the years to come. I would like to extend my deepest gratitude to QFC CEO, Mr. Yusuf Al-Jaida, and his team, especially Mr. Hank, for their continued support of QFC across the past several years to HBKU's International Conference on Islamic Finance. It's an annual event that provides a great opportunity to our students and faculty to interact with a galaxy of international speakers from around the globe, blended with local stakeholders. Once again, on behalf of the College of Islamic Studies, Center for Islamic Economics and Finance, and its team, I extend my heartfelt thanks for your support and encouragement. We greatly value this partnership from the bottom of our hearts. Jazakumullahu khairan. I also would like to extend a cordial invitation to all the attendees over here to our upcoming annual 2022 International Conference on Islamic Finance, which is scheduled to be held very soon, in less than a month, on October 9 and 10, at the beautiful setting of Qatar Foundation's Minaratain building. Conference details are available on the HPKU website. I remind that we also organize a yearly CEOs and Islamic finance leaders roundtable. The next one will be the 6th one, which is scheduled after the FIFA World Cup. This is an important roundtable bringing the theory and practice together. So as CIS, we are trying to bridge the theory and the practice. As part of our continuous service to Islamic finance at CIS, we offer MSc and PhD programs in Islamic finance by our excellent faculty members, which bring their experience from different parts of the world, and staff, and a number of them are in attendance here in the hall, including our several students. We have recently restructured our MSc and PhD program to include dedicated specializations on sustainable finance and Fintech. So we are keeping in touch with the changing reality. We are not in the ivory tower. We are also exploring establishing a new center, Foresight Center, Merkezul Firase. I translate foresight as al-firase, which comes from our culture. This is an example of rooted riwayul, at-tajdid al-muwassal. And I invite the people here to be partners with us in establishing this center, which will be a multidisciplinary center exploring the future of the Ummah, future of Islamic civilization, future of money, finance, banking, the world order, everything from an interdisciplinary perspective. And we need this kind of research in this age of uncertainty and ambiguity and fast change. Everybody amongst the Islamic finance leaders, regulators, governments, supervisory authorities, and academics agree that the climate and sustainability related risk factors are also the prime source of financial risks for the future generations. In addition to regulators devising the policies, the other market participants shall also play their due role. The education institutions are vital in promoting awareness and capacity building, while the financial institutions play a crucial role in promoting innovation for the sustainability of Islamic knowledge, ethics, and morality. And this is needed for green finance, but green finance is only one part of Maqasid Sharia, the purposes of our religion. Therefore, the Qatar Foundation hails the sustainability as one of its thematic areas of research. More than 50 entities working in education, research, and community development under the auspice of QF. It has undertaken many initiatives like Silatek to foster the ambitions of Arab and international youth in decent work, the education above all, to offer education to the children of low-income families, and the green buildings that uses the solar energy, besides the project to generate solar energy at the Education City and many other projects since the year 2016. The regulators may use the technologies for the price correction purposes to include and reflect the negative externalities the payer has extended to the society. The regulators can also help improve the situation of information asymmetry. This is a very crucial issue in our age, the information asymmetry between the providers and users of the funds by introducing improved format of templates for the disclosure of resource utilization and climate impact indicators. However, in line with the 17th goal of SDGs, referring to the partnership for achieving these goals, the partnership among the regulators is much desirable for addressing the growing concerns of climate change. And I'm very happy to see that actors from different countries are here representing their views from Malaysia to Saudi, Qatar, and from different countries. This is very much necessary for the realization of the Paris Agreement of below 1.5 degrees commitment by 2030 and to achieve the net zero carbon emissions by 2050. Furthermore, the financial setup across the globe is in the phase of transition and reformation due to the enormous enhancements in data storage and data transfer capabilities. This is what we call digital transformation of the whole social life. The data has become cheaper, the geographical boundaries are blurred, and the financial dealings have become more time efficient and more cost effective. Nonetheless, the trade-off is now between financial cost and social cost. So we have to keep a balance between them. In today's time, the people are paying the cost in terms of privacy compromising, i.e. by sharing data, while the data has become the soft power of today's world. Several social media platforms and freeware are implicitly gathering the personal data and process it through artificial intelligence and machine learning techniques for extracting the value out from the data, and thereby either they utilize it for their own business promotion or sell it for monetary benefits. Herein the question of ethical values become prominent for each one of the governing authorities, capacity building institutions, and the educational institutions. The policymaker shall seriously reconsider ethical and moral sustainability. According to Ibn Khaldun, ethical and moral sustainability is the foundation of all other types of sustainability. If you lose this, you lose everything else. Epistemic, moral, social, and cultural sustainability should be our top priority. This would be possible through rooted revival, at-tajdid al-mu'assal. Everything we do in the field of Islamic finance is grounded on the Islamic epistemic and ethical foundations. We need to be innovative in protecting the sustainability of our society, Islamic knowledge, ethics, and law. The sustainability of Islamic ethics depends on serving maqasid al-sharia, which is ESD in our tradition, and we may also think about coming up with a new theoretical framework for these goals. Thank you very much for your attention, and enjoy your lunch.
Thank you very much, Dr. Rajab. And with this, we have come to the close of our event today. I want to thank you all for taking an active role in the advancement of Islamic finance. Together, we can surely take decisive steps towards more sustainable systems that acknowledge and draw our shared responsibilities of the public and private sectors. I hope you benefited and learned from the different leaders and stakeholders who took to the stage tonight. We look forward to reconvening in the near future and pushing the Islamic finance and green agenda forward. Please enjoy the networking lunch that is about to commence, and enjoy the rest of your afternoon.